Have you recently resigned from your job, been made redundant, or received a payout from your employer and wondered, why is so much tax being taken out? Well, today we're talking about employment termination payments, or ETPs. We'll cover what an ETP is, what payments qualify, what payments don't qualify, real life examples, how ETPs are taxed. And by the end of this video, you'll have a much better understanding of your final pay packet. Let's get started. An employment termination payment is exactly what it sounds like. It's a lump sum payment you receive because your employment has ended. This could happen because you resign, you retire, you're dismissed, your position becomes redundant, or your employer pays you compensation connected with ending your employment. The important thing to understand is this: not every payment you receive when leaving a job is an ETP. Australia has different tax rules for different parts of your final pay. The easiest way to think about your final pay is like a pizza. Each slice is taxed differently. Slice number 1, outstanding wages. That's simply money you've already earned. Slice number 2, unused annual leave, another separate category. Slice number 3, unused long service leave. Again, different tax rules. Then you have another slice, employment termination payments. These include certain special payments made because your employment ended. The mistake many Australians make is assuming the entire final payout is an ETP. It's usually not. So what types of payments are usually employment termination payments? Number 1, payment instead of notice. Suppose your contract says 4 weeks notice. Instead of working those 4 weeks, your employer simply pays you. That payment is generally an ETP. Number 2, golden handshakes. Some employers pay an additional amount as a goodwill gesture when employment ends. These payments are commonly ETPs. Number 3, severance payments. Many severance payments connected with ending employment can also qualify. And in some redundancy situations, amounts above the tax-free redundancy component may become ETPs. Now let's look at what usually isn't an ETP: outstanding wages, unused annual leave, unused long service leave, bonuses you've already earned, superannuation benefits. These all have their own tax rules. So if you receive a final payment of $50,000, don't assume the entire amount is treated as an employment termination payment. Different parts may be taxed differently. Let's look at a simple example. Meet Sarah. Sarah resigns after 5 years. Her employer pays her $3,000 of outstanding wages, $8,000 of unused annual leave, $4,000 instead of 2 weeks notice, and a $10,000 goodwill payment. Let's break this down. Outstanding wages, normal income, unused annual leave, separate tax treatment, payment instead of notice, generally an ETP, goodwill payment, generally an ETP. So Sarah's employment termination payment is $14,000. The rest follows different tax rules. This is why understanding your final payslip is so important. This brings us to one of the biggest questions. How much tax will I pay? The answer is, it depends. Australia has special tax rules for employment termination payments. Factors include your age, the type of payment, whether you've reached preservation age, and whether the payment exceeds the annual ETP cap. Many people see tax withheld from their payout and panic. But remember, the withholding tax isn't always the same as your final tax outcome after you lodge your tax return. Myth number 1, everything in my final payout is an ETP. False. Different payments have different tax rules. Myth number 2, I'll lose half my payout to tax. Not necessarily. Australia has specific tax rules designed for employment termination payments. Myth number 3, I don't need to check my payslip. Definitely false. Always review your termination statement carefully. When leaving a job, ask yourself, what part is ordinary income? What part is leave? What part is an employment termination payment? And what tax rules apply to each? So there you have it. Employment termination payments can sound complicated. But the basic idea is actually quite simple. Not every payment you receive when leaving a job is an ETP. Some amounts are ordinary income. Some relate to leave, and some qualify as employment termination payments with their own special tax rules. Understanding the difference can help you better understand your final payslip and avoid unnecessary surprises. If you found this video helpful, give it a thumbs up and subscribe for more easy to understand Australian tax, investing, and personal finance content. And remember, this video is general information only and shouldn't be considered personal tax or financial advice. Thanks for watching, and I'll see you in the next one.